Good morning, everybody. Good morning. Just after 6 a.m. on Monday here, June 12th. And we are going into OPEX week, OPEX week, quad witching OPEX week, CPI, FOMC, all taking place during this week. Now, I will bring you really quick to the charts. Some people might be freaking out. You'll see this major gap over here overnight. That's because your futures contracts have all rolled over to September. So it looks as if we've got this major gap up. We're only up 6.5 points. Different pricing now on the futures. So it is going to be a little bit of a rebalancing curve, you could say, for those who trade strictly off of the main futures. The ES, this is ES. Here's your NQ. Here is your YM. And here is your Russell 2000. So again, futures rollover. That's why you've got your big gaps over here on your futures. Nothing really affecting what's happening in real time. Here's your QQQ we're going to stick with because, again, we have had that major run, 11 out of 13 weeks. So this is going to be a major factor as we continue into the week. Your 1% line is at 354. 351, a lot of you remember from as we were trading it last week. So 354 is going to continue to be your main source for short-term trading. So that's what you want to be sticking with. You've got your 357.50 at the top, 354 down here at the bottom. Over on SPY, same more or less, is your 432 being your minus 10% from the all-time highs line, and your 1% has now moved up to 427.67. So again, that is where your bread and butter is going to be: the 432 to the upside, the 427.67 to the downside. With Friday's overnight close at 428. So you're going to have to keep that in mind when you're trading these short-term 0 DTE, 1 DTE into major movements. RTY again over there. On the SPX, again, SPX, we only came down to 42.91, 42.70 on Friday. That is obviously going to be the initial expectation that you're looking at for a bottom. However, now that we've minus 1% here at 42.79, then you're looking at the lows of last week at 42.61, and you all remember how we never were breaking below that 42.65 last week. That is your litmus zone. We've never closed in the 4300s. That's the reason why, as you see here, we did print the 4300s, no closes in the 4300s, and we are into quad OPEX week. So again, this is why you see the trade over here in the spread room for today. 4305, 4300, shared it with you yesterday. 345 if you can get a fill. You got a 290 bid. So again, it's close to a 150% trade. Looking at this for what it is, showing you back again to where we are from Friday. Looking at these numbers, this one is wrong. That needs to be changed because obviously an end of the week typo. 4289, not 4189. 42.89.90 is your 20% off the October lows. 42.92.44 is your plus 20% of the 2022 low close. So that's where you are going to continue to have the algorithm try and fight. Lose that, and you obviously see the downsides that you're going to be risking for after that. Again, just very quickly as we move around, it's Quad OPEX week. I've shared with you all of the data that I can get back to and share about what Quad OPEX week is all about. This, again, being that it is a fourth green week last week that we are going into. Those, and I will share as we get into the open. The opening trade being the opening candle is where I would be looking for a strong risk trade of the week. That being where we open on today's session. We get an open example at 4304.88 example. Then I would be looking at the 4310, 4305 credit spread for Friday. And once again, Looking at it from 4 weeks, this being a fifth week, God forbid we do get a fifth week, but also looking at it from a trade point of view, with that being the riskiest of risky trades, to be looking at that green candle week. So again, we'll see what we get as we go into the day. But yeah, as of right now, this is what we're looking at for the day, where we're not getting a lot of price action. Here's the IWM coming back to around that midpoint level from Friday afternoon. The IWM did a lot of work, so it is going to be one of those ones that's going to be watched, because again, we had that algo day out of absolutely nowhere on Tuesday, where nothing overnight, nothing at all, opening bell, skyrocket on the Russell 2000. Watching this 184.41 area, 184.41 opens up 183.35. Then we see if there's any kind of reality to the downside. So be very, very careful with your upside exposure as we go into this week, and be very, very diligent about your downside exposure, because again, having been as high as we've gotten and grinded the way that we have, very, very quick and very, very easy to oversell these wider time frames, which are our major triggers. So I'll see you guys in the chat room. Have a great Monday morning.